Hi, my name's Chris Smith from Web Financial. I'm bringing you our lending and finance quarterly update via video this time instead of an actual newsletter. So Web Financial, if you don't know, is a financial services firm. We have accounting, planning and lending all in one roof, which really enables us to look at your lending and investment requirements from several different viewpoints to really meet your needs. And that might be, what structure do you buy an asset in, whether it's property or shares, to suit taxation or asset protection. We can also look to protect your income and look at future planning in that space. So we offer all of that, and I think that's what makes us unique locally and more widely in terms of that service that we are offering. So what I want to do really is give you a brief update of what's going on in the lending and finance space, and hopefully you can pick some things up there. So what have we got? We've got some fluctuations in interest rates we've seen recently. So a couple of months ago, the 4-year fixed rate for a number of lenders was really competitive, which is not always the case. Normally your sort of 1, 2, 3 year is one of the most competitive. However, we've seen that come off over the last month or so, with a number of lenders lifting their 4-year fixed rates back to sort of probably more normal levels in terms of its space within those lower term fixed rates. However, there are still really competitive 2 and 3 year fixed rates, and there are some lenders still offering under 2% for those fixed rates as well, so definitely worth a look. Variable rates have also tumbled with a number of lenders as well, so the RBA has been pretty firm on holding interest, the cash rate as it is, but the cost of funds of some lenders has obviously dropped, and they've passed on a drop on their variable rates as well. A lot of lenders do base their variable rates on loan to value ratio, so the more equity you have, sometimes the better interest rate you can get. Credit is still fairly readily available. Lenders aren't being too strict. It's certainly a lot better than it was a couple of years ago post Royal Commission, and with interest rates dropping, servicing levels are fairly reasonable, and the availability of credit is there, and there's a wide spectrum of lenders who can suit the needs of quite a few customers. We've got the first home loan deposit scheme, new spots coming in as per the budget. So July 1, I think that will kick off. There's a number of lenders who operate in that space and allows first home owners to buy a property with a minimum 5% deposit and not pay lender's mortgage insurance, because the rest is guaranteed by the government, which is a great scheme. And a lot of banks have run out of spots, certainly for existing homes, so I believe there will be some new spots opening. And a new one is a single parent deposit scheme as well, which allows single parents as a minimal deposit to enter into the property market, and again have their loan guaranteed by the government and the lender's mortgage insurance, and just making it a bit easier for them to get in. The issue I have with this scheme is that the property market is really based around 2 incomes, such is the expense of house prices. So it can be difficult for a single income, unless you're a really high income earner, to have the borrowing capacity to get in. So great scheme. I'm just not sure how many people can afford a $500,000-$700,000 loan with a minimal deposit on their single income. And that's it from me. So if you're looking to have a chat and you'd like to consider your lending finance options, whether it's purchasing, investing, asset finance, commercial, anything like that, then certainly give me a call. Our number here is 0242444054, or www.webfinancial.com.au, web with a double B. Thanks so much, and look forward to chatting soon. Cheers.